That's madness. Gosh, what a mad year for the UK property market. Being a property owner and investor, I really wanted to understand how the crazy housing market will play out. Is there a bubble? Is it about to pop? Is there a housing crash? And of course, how will Rishi Sunak handle it? Last year for me was a tricky one. I had an empty unit for a few months and had to accept a 20% reduction in rent to get it rented. And the thing is, it's right in the heart of the city. It was a tough call, but we were determined to keep the mortgages covered, so we took the hit. We also accepted a 10% reduction in rent for another tenant who had their income impacted by the pandemic. And finally, with a new unit of ours just becoming available, we are trying to re-let at a 12% reduction to our prior year figures. In short, I'm having to take hits on my rent, which will stay for me for at least a year and probably longer, because I don't like increasing rents once a tenant is in.
It's fun and games, but when I do it, it's, oh, she hit it below the belt. Oh, she went too far.
So for me, while it's not quite an economic collapse, the housing market, particularly in the rental sector, has led to me taking a hit on my investment yield. And yes, it's part of the risk, and we're still alive.
I'm dead?
Let's put all of this into context. The last 12 months has been an insane year for property. Sheer madness. For the first time ever, the housing market was shut down and the lockdown suspended 450,000 home moves. That's almost 500,000. Surely that would cause any housing bubble to pop, right? And cause the market to collapse. Question. Everyone started panicking.
Party is over. No, wait!
All commentators and analysts were predicting a crash, but then YouTube, being the beautiful resource that it is, was debate and discussion, and I found this YouTuber who speaks exclusively on the UK housing market, Ranjan Bhattacharya, with his channel Succeed in Property. And as he is an investor himself, I gave him a listen, and he was predicting the market to go the other way. No housing crash, but prices to continue to rise. What? When the housing markets did reopen in May last year, Ranjan called it right. But how did he do that?
Do you think you could show us the way?
Yeah, why?
Well, let me tell you guys, sales in May were booming, and it's because of the human element, which is so hard to predict. And this all makes sense in hindsight, but as we are living through it, to challenge the economic models that have been established from past experiences is tough, and it's naturally counterintuitive. The lockdown meant that our homes are even more important than before. Prices soared, and the stamp duty holiday created more of a frenzy. And of course, the largest government bailout protected the UK from the worst recession in 300 years, which meant that Rishi Sunak and the government would do anything to stop the house prices falling. That's the key point I picked up in my readings and listenings over the last few weeks. It's high on Rishi Sunak's agenda to protect the housing market and the prices.
Alrighty then.
But let's sprinkle the facts, guys, and take a deeper look at the 5 indicators that can help shape our rationale for what the housing market in the UK will do in the coming months. First of all, quick reversal. It's very true, in the initial stages of lockdown, there was panic and fear. Estate agents like Chesterton, which has access to the most beautiful portfolio of London homes, was stating at the time that multi-million-pound properties were being sold at 25% discounts, and markets and transactions plunged. The bubble burst. However, with all markets, including the stock market, guys, it's not a perfect science. And with correction style events, there is an overreaction, an overshoot. But by the 3rd week of the lockdown last year, buyer registrations doubled pre-lockdown levels. Buyers were flocking to the market in bigger numbers than before, and moving homes became a priority. I even did a video on it in my cringe binge early days as a virgin YouTuber. Ugh, if you must, go and look at it over there. People needed to use their homes more and more, and we needed more outdoor space for prison-style strolls around the garden, and additional space for our desk setups and working from home lifestyles. All major data aggregators like Rightmove, Nationwide, ONS, and even Halifax were showing sharp increases in house prices. And so, when the markets reopened last summer, agents were slammed with inquiries. The housing crash and economic collapse didn't happen, and house prices picked right back up. But will the growth continue? And if you look at this graph again, you will note that the last couple of months, the lines have changed gradient. This graph is based on asking prices, and so what the data is showing us is that house price increases are going to slow down. But it's never that simple. Will the growth continue is a big question. So the winter lockdown that we've just had, and expected end of stamp duty holiday before Rishi Sunak extended it, had meant that that the buyer demand plunged in the run-up to 2021, and property search engines reported an 80% drop in searches in comparison to the summer peaks of 2020. And with all things corona, it's volatile, and with a clear roadmap from Bojo on how we exit this lockdown, well, that boosts consumer confidence. And the general success of the vaccine rollout has now meant that the property market is back to tracking to summer levels of last year. So you can see the spiky nature of demand, which in turn impacts house prices. And now this data doesn't really consider the 5% deposit mortgages, the tax breaks, the furlough scheme changes, which will all have an impact in pushing demand even higher. And so demand-led pressure would, could, and should push sale prices even higher, which is where my favorite observation of the data comes from, guys, and that is supply and demand led arguments, which I think are the single most important factor in understanding. What we know from research papers, media and consulting firms is that there is a shortage of properties on sale. The data shows it, and that's fact. But what the graph does not pick up on is the change in trends. So you know, in the UK we always talked about how London was a mad tear away from the rest of the country, but this lockdown has shown the volatility in cities, and London has fundamentally changed. Rural locations have enjoyed a lockdown boom, and I think it will continue as its London relocators have realised that they can actually escape the capital with the growing age of remote working. And many Londoners who rented in the past with nice disposable income realise that those savings they have for the London purchases, well, they can get you a lot of space out of town. And the data proves it as well. Halifax, one of the UK's largest lenders, has found that house prices in the southwest has jumped 17%. That's madness. And other data points such as the Savills buyer register shows that half of new home seekers want a garden as a key one, and they also want proximity to a tube station. And that's been so important for Londoners in the past, as 70% of people a year ago listed it in their top 2 priorities, and that's almost half at just under 40%. I also really need to know if the lockdown effects will turn around, and as an investor in London and inner city London, I'm correlated to the London market and have been thinking intensely as to whether we switch tack. Well, here's what I think. Cities are there for a reason. Congregation of minds. We are social beings after all, and we need clusters to meet friends, hang out, shop, socialize, go dinner, and immerse ourselves in theatre at some point. I'm a romantic like that, and the long commute can only be romantic for so long, guys. So I do think gradually cities will pick up again. The romance won't end. I guess we will be finding out once the summer sun pops its head around. The key thing to watch out for is the rental market. It's more liquid, and with employers opening offices and requesting staff to start returning to work, we should expect to see the rent begin to reverse and supply start to become sparser. But let's see. I should also say something about stamp duty, and I did take advantage of it when I did pick up a property during lockdown, and it was nice to save a little bit of cash on the stamp. The extension of the stamp tax break from Rishi Sunak does indicate that maintaining and building that momentum is a treasury priority. Tax break, vaccine rollout and summer are all good, strong positive pulls for a buoyant housing market, guys. Bounce back is expected to be very strong as the policies of help to buy and stamp relief track those first time buyers in great numbers. And the second steppers who are leveraging up are naturally on the ladder. Getting more people onto the housing market, which has been stagnant for so long, will create a flurry of activity. It's also exciting. Anywho's, posting about property is a favorite topic of mine, and I have a bunch of videos from my cringe binge days as well. Please don't go there, but do if you must, and if you want to really see me cringe, talking about whether you should pay off your mortgage. All of us think about mortgages as a weight on our shoulders, but the financial aspect is a little different. Click up and I'll tell you why. See you there.
You have a really nice place here, Paul. How much did you pay for it?
Well, actually, that's none of your business, Christy. But I can assure you, it certainly wasn't cheap.